Good afternoon, good evening, depending on when and where you're viewing this. My name is Mike. I am the Crypto Liberal. Thanks for joining me again today. It is truly appreciated. Again, we're documenting my journey. Nothing in this is financial advice. Nothing in this is telling you what you should be doing. I'm just telling you what I'm doing, what I'm looking at. And frankly, what I'm looking at, it's been perfect, right? We have nailed it on this channel. Do me a favor, hit that like button, hit that subscribe button, tell your friends, share the video, because whatever we're looking at, we're the only ones seeing it, I think, on all of crypto Twitter and crypto YouTube. So today is a new week, right? A new week. And what does that mean on this channel? It means that we're dollar cost averaging into ADA, Ethereum, and Bitcoin. And I started this channel like 21 weeks ago. This is like the 21st week anniversary. And for 20 weeks, I've been, every day I tell you, any new money put into ADA by the end of the year, a year from now, 5 years from now, will outperform Ethereum and Bitcoin. And any new money into Ethereum today will outperform Bitcoin by those same time frames. But I don't just tell you that and let it float in the ether and let you wonder whether I made a prediction or not, right? I document it. I prove it to you. I prove it to you, my audience, that what I'm saying is accurate. I don't just make a prediction and then forget about it 2 weeks later and then you forget about it, right? No, we talk about it daily and I prove it daily. How do we do it? We show our portfolio, right? We dollar cost average into those three cryptos, $100 each week. We've done it for 20 weeks. Well, let's look at that portfolio. Let's look at our tracking, right? Let's track it. Look at that. ADA is already outperforming Ethereum and Bitcoin. They're all losing against the US dollar, right? We put $2,000 into each of them, $100 each week, 20 weeks, $2,000. They're all losing against the US dollar, but ADA is already outperforming Ethereum and Bitcoin. It's not even the end of the year yet. And look at that. Ethereum is in second place, outperforming Bitcoin. Exactly like we've been talking about. Can we get any more perfect on this channel? Now, so we're going to dollar cost average. This is our 21st week. We're going to put $100 into each of those again this week, today, and follow me on Twitter because I will show you on Twitter how much we're getting for that $100 in each of them. So let's look at it. Let's do it now. $100 into each of them. So we're going to put $100 into Bitcoin at $18,769.91, $100 into Ethereum at $1,275.63, and $100 into Cardano at 0.4426 cents. Okay? Again, follow me on Twitter. I'll tell you exactly how much we're buying for each of those at crypto_liberal. Now, that isn't all we've nailed on this channel, right? Again, none of this is financial advice. I'm just documenting my journey. You need to make your own financial decisions based on your own financial research. But frankly, we don't get anything wrong in this channel, to be quite honest. So let's review where we're at with Bitcoin because we've talked about this ad nauseum on this channel. But let's watch. Let's just see where we're at. Okay. So here we are with Bitcoin. This is the Bitcoin chart, daily chart, Coinbase chart. Keep an eye on this upper red line, this downsloping red line right here, right? This is about when I started my channel back here, and I had this line drawn back here, and I told you it was going to be strong support, and it was for over a month. And this is the one thing I got wrong, right? I said, oh, I think it might hold. If it doesn't hold, we were going to be in trouble. Well, we were in trouble. But I was hoping it was going to hold. I thought it would hold, and it did for over a month. But what I didn't anticipate is Terra Luna, Celsius, Voyager, these scumbags of crypto who were gambling their investors' money, over leveraged their investors' crypto, and went bankrupt, belly up, right? Well, here we are. And as soon as we got below that line, I've been telling you that red line would serve. It's the strongest resistance we have. Oh, look at that. Got up to it, hit it perfectly, rejected. Just about 2 weeks ago, we were going up again. And this is when you started hearing everybody again on crypto Twitter, crypto YouTube. We're going to 30,000, 35,000, 40,000. I told you, no, we're due for another dump. And I said, before we even got up to the red line again, I said, go back and watch my videos. I said, we're due for another dump. And I think we're going back to below the lows of the summer. Remember the lows of the summer? The candle back in July, or what the lows of the summer after the Terra Luna dump, we went down to the candle closed at 18.9. It wicked down to 17.5. Oh, 2 weeks ago I said we're due to go below those lows. Candle closes below 18.9, wick closing below 17.5. And here we are, right? What's happened? Well, right, we've had candles close below 18.9. I mean, we're at 18.8 right now. So that has come true. I mean, we nailed that. So here's what's important. A little, last week I think I brought up this upper sloping red line, and I told you that is the line in the sand. There's a chance if we could stay above that red line, there's a chance that that could be the low. But I'm still thinking that we're going to go below it. That's what I said a couple days ago. Well, look what happened. Look what happened. We hit that red line exactly like I told you it was going to be support, and here we are. We got supported by it, but now we're coming down to it again. The more times you're going to hit that support line, the less chance it's going to hold. And I'm not confident it's going to hold, and I'm still leaning to the side that we're going to go below that red line. Why is that red line so important? Let's look at it. Let's follow it. It goes back 4-5 years. Right? I mean, we were way up above it, so it's not coming into play until we get, let's watch it, keep an eye on it, till we get back here. Well, now look at how perfect it held as support in September of 20. In, all of September of 2020, it held as support. Well, it held as support back here, July of 2020. Look at that. Look at how perfect that held as support. It goes back further. Look at how it held as support in May of 2020. Well, it goes back further. Look at this. Yeah, so it's still May. Okay, now this is the COVID dump right here, right? So that's why I kind of ignored this. I have a line below that represents the COVID dump, but I'm ignoring that because that was a black swan event. So let's kind of ignore it for now. So going back, let's pretend that COVID dump didn't happen, right? Again, support. January of 2020, kind of, it went a little bit below here, but I think you can consider that support. December of 2019. Look at this. Support. November of 2019. Go back further. Follow this red line. Look at this. Look how perfectly it held as support. Now, this is after we hit, our 20,000 back in 2019, or end of 2018, I'm sorry. Right? So look at, after we hit that high, it was 2017. I got to go back further, right? So yeah, 2017, after we hit our highs, we had that long bear period, right? Well, look at, after we went down to like 3,200, we skirted this line as support all through 2019. Look at this, February 2019, all the way up to, what are we at? April 2019, and then we finally started to escape it a little bit until we came back down and revisited it, which you expect in November of 2019. So pretty much all of 2019 we were skirting this line. Well, and then we had the COVID dump, and then after we got recovered from the COVID dump pretty quickly, right? We stayed above it for a lot of 2020. Look at that, 2020 from in April 2020 all the way until what are we at here? July of 2020. Now, if you take away the COVID dump, that's like 2 years of skirting that line. That line is so important. You go even further, right? To the end of 2020, October of 2020, we're still skirting that line until we finally decided, we're taking off. Well, look at this. Now we're revisiting it. This is a huge line. I just showed you why. And now we're coming back down to visit it. We're at 18.8 right now. The line right now is, approximately, these are ranges. Don't consider this a line in the sand, right? But it's 18.1 right now. We'll say 18,000. Keep an eye on this, because if we go below that line, it could be a really fast dump. Now, it could be a black swan event. Maybe Putin does something strange in Ukraine. Maybe something happens, with the EU, with the problems they're facing, and inflation and energy prices. Who knows? It could be a black swan event. We go down, we crash hard through that line and stay below it like the COVID crash, and recover pretty quickly. Or the even worse option is, right, we go below it and we stay below it for couple months, a year. Now, so we need to keep an eye on that line. I tend to think we're going below it. I hate to say it. I tend to think we're going below it. But we just need to play what is dealt us, right? None of us, I don't, you don't, nobody watching this has the power to control the chart, right? We got to go where the big money sends us. I think the big money is sending us below that line. So keep an eye on it. Keep an eye on this channel, because we'll keep talking about that line. But we're coming down to visit it again. Can we bounce off of it and stay above it? The more we visit that red line, the less chance there is that it holds. So that's all. That's really all I have to share today. If we go below it, it could get scary. And that I tend to think, here's my belief, right? Not financial advice. I tend to think we're going to go below it. I tend to think we're going to go down fast. I don't know, 14,000, 13,000, 12,000. Worst case, right? I mean, let's go. My worst case is we come all the way down to this red line, this downsloping red line. So here we are today. Let's look at it, right? It's like at, what is that? About 10,000. We'll call it 10,000. And you can see where this red line comes from, right? This downsloping red line, this bottom one. Look how well it held its support here, throughout the summer of 2021. After we had a big bear, after we went to 64, right? We came down and held that line as support. And here, right here, it was resistance on our first push up to the 60,000 range, right? Look at how it was resistance there. So that red line, that's my worst case scenario, right? Down to 10,000 right now. And I'm not saying that's going to happen, but if we get below this upsloping red line that we're coming down to visit again right here, if we get below that upsloping red line, I think we're going to come down fast. Maybe we come down to this 12,400 blue line right here and bounce off that. There's just not much support between this upsloping red line and what comes below it. So if we get below that red line that we're coming down to, it could come down quick. And I think maybe quicker might be better, because we might recover faster, right? People will see an opportunity of a lifetime to jump in. I tend to think it's not going to be, I don't know, what's fast in crypto, right? Fast is a month, right? We go down, we come up in a month. I don't think it's going to be that fast. I think if we go below that red line, we're going to be below it for 3 months, maybe into 2023. We'll see. We'll see. It all depends on how fast we go down, how big of a dump we take, and how we build a base from there. I think we're going to go below that red line. Just my thoughts, not financial advice. You got to do you, right? Do you. What I'm doing, my game plan right now, and I told you this in my last video, I've been dollar cost averaging into ADA and Ethereum all along, ever since I've been making these videos. But just this last week, I started dollar cost averaging into Bitcoin. And I set my schedule. I've got it set. Every Saturday, dollar cost average into Bitcoin. Every Sunday, I'm a dollar cost averaging into ADA. Every Tuesday, I'm dollar cost averaging into Ethereum. Just set it on a schedule and don't even really think about it, right? It just happens. And money's taken out of my account, my checking account, and put into those three. That's what I'm doing. That's my game plan starting here. Now, you know my positions. I'm deeply rooted into ADA, a little less into Ethereum, and I barely have any Bitcoin at this point. But it's worked out because, as we talked about, ADA is outperforming Ethereum and Bitcoin, and Ethereum's outperforming Bitcoin. So we're doing okay. And that's my game plan. That's my game plan, not financial advice. So that's all I have. I hope you're having a great weekend. This is an opportunity of a lifetime. Opportunity of a lifetime, I think. Dollar cost average, right? Dollar cost average is what I think is an opportunity of a lifetime. We might be down at these levels for a year, another year, maybe two. Throw as much money as you can into at these prices is what I'm doing. That's my philosophy, because after we start going out, we might never come back down here. You know, we'll see. But do me a favor. We have nailed it, especially if we go below that red line and I add another prediction that's accurate, because I don't see anybody else talking about these support and resistance levels that we have brought to this channel, nailed on this channel. They've hit exactly, got rejected exactly at a resistance, have been held at support exactly at our supports. And then, you know, we talk about them failing eventually, and I still think this red one's going to fail. So we'll see. But do me a favor, give me a like, give me a subscribe. That's all I have. I hope you're having a great weekend. I'll be back. I just need some motivation. So give me some motivation and give me a like, give me a subscribe. I hope you all have a great week, and I will be back again this week at some point, depending on what the market shows us. Peace and love. I am Mike. I am the Crypto Liberal. Ban the guns.